Good morning, good afternoon, good day. Welcome to Q Traders Graduates Club live market meeting. Today is 12th August 2020. It's 8 a.m. Eastern Standard Time. Hi Rick. Hi Enamel. I hope you are able to hear me and see my screen. Great, thank you. I am Sagar Nandi. I used to work in IT. I retired now. I am swing trading stocks using the Q systems and techniques. This is my traders forum, my email ID, YouTube channel, and Twitter handle where I regularly share live market and stock analysis. All these are open to the public and you are most welcome to make use of them. Disclaimer, I am not an investment advisor. This demonstration is for educational purposes only. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. This is a live session. I have not prepared for it. As usual, I will use Q Elite and Q Global for technical analysis, Q Vital for fundamental analysis, Q Edge for sector industry rotation analysis, and Q Index for market level index analysis. That was the last slide of my presentation. I'll now continue with the live system. Let's start with the global markets. Australian market AXJO, it was inside a sideways range and that is continuing. There is no direction here. China market CSI 300 index. It was also moving sideways. In the last webinar, I showed it was inside a triangle pattern. The memory support is now broken. However, price recovered back inside the range, continuing to move inside a range in the weekly also. There is no clear direction. India's Nifty index was in an uptrend that is continuing both in daily and weekly charts. In the last webinars, I mentioned that when price came to the memory support, that was the time to start to buy fundamentally strong stocks. If anybody did that, they would have significant profit as the market index recovered from the memory support. It is continuing to be bullish. Australian market, not Australian, UK market, FTSE index, that was inside a range. It is continuing inside a range. At this point, it broke below the range, but now it recovered again. There is no clear direction. Now the US markets. For the global markets, I used Q Global running on Metastock. For the USA market, I will use Q Elite running on TradeStation and I will use the market ETFs. S&P 500 ETF SPY. In the last market roundup, I mentioned that price was likely to go and retouch the previous all-time high. This week, initially it tried to go up, but yesterday it pulled back, though on the daily it stopped right at the memory support level. In the weekly, there is a memory resistance, so there is a chance that price may reverse down from there. Earlier, the memory resistance was not there. These are dynamically drawn. It is continuing to be in an uptrend, no doubt about that. One day's pullback doesn't change the trend. As I mentioned in the previous webinar, though it is bullish, it is close to the upper boundary and I am not going to take a long trade in SPY. You can see in the overnight market, it is actually up by 0.78%. Bullish, but extended to the upside. If I change the weekly template to the one that has the stretch and that has the jump and thrust indicators, you can see thrust and jump both hit the red dots. That is the most extreme level it had been in many months, and the jump pulled back a little bit. We have to see how the week ends. Today is Wednesday. Whenever the jump and thrust both in the weekly chart hit the red dots, then I start to look for shorting opportunities. If not in this ETF itself, maybe in underlying stocks. I did take some short trades. If you follow me on my forum, sagarnandi.com, you would know exactly what kind of trades I'm taking and exactly when I'm switching from bullish trades to bearish trades. Past several weeks, almost all my shared ideas were on the long side, and last 2 or 3 ideas were on the short side. That shows that I am starting to consider taking bearish trades now. I will go through some of those trades later. Let's look at Nasdaq ETF QQQ. Here also the thrust hit the red dot and jump hit the yellow dot. Earlier jump had hit the red dot. It continued to go up after that from here. As of yesterday's close, the weekly displayed a bearish headwind signal and the backdrop color flipped from cyan to magenta. That is bearish. However, it has a memory support in the daily chart. As I mentioned in the previous roundup, probably all the market ETFs were having and still having these memory support lines. That is why I am not in a hurry to take a lot of short trades. We'll have to see how it goes today in the overnight session. QQQ is up by 0.91%. Dow Jones Industrial Average DIA, the backdrop color is bullish, however the candle shape is mixed. Here the thrust hit the red dot. Yesterday price opened higher, that was a gap up open, and then it came down sharply. Looking at that, you could attempt to take a gap short day trade. Let's look at the fine-tuned chart to see how you could precisely enter it, if you could precisely enter it. This is the fine-tuned chart. In the morning session, the suggested interval is 5 minutes. I changed to 5-minute interval. It opened with a very large gap up. And then the early range high and early range low lines form. At this point, price closed below early range low, and you could take a gap short day trade at this point, putting stop just above day's high. After that, for a long time, price moved sideways. The stop was never hit. And in the afternoon, it dropped sharply, giving a reward that was much bigger than the risk. Gap trades tend to give very high reward risk ratio, and this was no exception. If you traded it, you had a large profit. In DIA, using this gap short day trade setup. Interestingly, if you were watching the market ETFs yesterday, as I do, in the morning session, currently it is showing today's overnight changes, but I'm talking about yesterday's changes. Yesterday, if you looked at this areas, you would know that DIA was actually the strongest of the four market ETFs if you consider the percentage change. It was up by maximum percentage. However, if you use the Q signals, the Q early range high and low levels, then you would know that it was the first to break decisively below early range low. That is why if you were watching the market ETFs using Q fine tune charts, you would short DIA. Also, DIA gave the biggest gap up open, resulting in the most profitable gap short day trade. If you are taking a day trade in any of the market ETFs or a day trade in any stock in general, you may keep an eye on the market ETFs and try to time your entry by looking at the movements of the market ETFs, as I tend to do often. DIA gave the very nice gap short day trade yesterday. Let's look at the last market ETF we study. There is a question. Yes. Yes. In the trade station Q Elite, if we want to add the charts where the jump and thrust are there, we add the studies, go to studies, add study group, and then you will find different studies, the backdrop and backdrop basic. Backdrop has the thrust and jump for the weekly chart. Similarly, entry has the thrust and jump for the daily chart. As you would notice, I don't keep them on the chart usually. Only sometimes I look at them. Why? Because the Q trade setups don't have thrust and jump as their necessary condition. So we don't need them for checking if a valid trade setup exists. Sometimes I use them to see if the market is overextended and start to look for early reversal trade setups. That's why I put it on right now. You can see IWM is also hitting the red dot on thrust. On jump, it has hit the yellow dot. You may see if it comes down today in the overnight market, it is up by the maximum percentage of the 4 ETFs, up by 1.19%. It is bullish and it has memory support like the other market ETFs also. So the market ETFs are bullish. Now let's look at the leading stocks. Let's look at Facebook. Is having memory support. There is a bearish headwind weekly signal. However, there is memory support. There is no short trade setup. Long position holders may be cautious, but they may put the stop below the memory support level. Amazon, the weekly change to magenta. Weekly has a bear release signal. It is inside a triangle pattern in daily and right at the memory support level. If it breaks below the memory support, then there may be a shorting opportunity, not using weekly daily templates, but probably using intraday charts. However, as I tend to say, the FANG stocks are very strong. It is possible to short them, but there may be other easier shorting opportunities. I did take a short in one of the FANG stocks. I will go through it later. But in general, I have seen that it is easier to profit from shorting less known or weaker stocks. Netflix, this is in a downtrend now. It has memory resistance, no memory support in the daily chart. The weekly backdrop color and shape both are very bearish. The magenta color candle in the daily came on this day. Now it is a bit far from the recent high. Therefore, there is no Q swing short trade setup right now. The risk is too much here, but it is looking weak. If somebody was holding a long position in Netflix, they would start to be cautious from the time this magenta color candle appeared in the daily chart. Looking weak, but no short trade setup. Microsoft, this also displayed a bearish schedule in the weekly. Earlier, it displayed a bearish schedule in the daily that created one watermark resistance. Price tried to go above that, created a false upside breakout, displayed a bear release signal. Therefore, on this day, there was a box short swing trade setup. If the weekly color was yellow, I'm not sure if the weekly was yellow at that time. Even if weekly was not yellow, looking at previous week's bearish shape candle, you could probably take a short trade right on this day. That would be a box sideways market or double top short setup. That has given significant profit because it is near the memory support. One would book profit yesterday itself without risking the price to go up again today. If now price can go up little bit and then breaks below the memory support, then the next short trade setup will come, and that will be a go with flow trend following short trade setup. That is how the headwind signal tends to appear first, then there may be a bounce or box setup followed by a go with flow short setup if the downtrend continues. Because of the memory support, I will not take any trade in Microsoft right now. In the bearish side, on the bullish side, I will not take any trade because the weekly backdrop is bearish, shape is also bearish. Google, here the weekly backdrop color is bearish. It is breaking below memory support, and daily is also breaking below memory support. Here the stop loss may be narrow. If Google breaks below the memory support, there is a low risk shorting opportunity here, not using daily chart template, but using fine-tuned chart template, especially if price opens up in the morning and then starts to go down in the fine-tuned chart. That may give a very low risk shorting opportunity. And if you are attempting that, then you may keep an eye on the market ETFs trying to synchronize the short entry with the market move. Tesla, the weekly backdrop color and shape both are bearish. Daily displayed a magenta color candle 2 days ago, from now 3 days ago. Today's market is not open yet, 3 days ago. So if you held a long position in Tesla, you would be cautious from the time this magenta candle appeared in the daily chart. Now it is already down for 3 successive days. I would not suggest taking now. The stop loss will be far away. Rather, if price could come to the memory resistance and reverse from there, that would give a very low risk shorting opportunity. Now comes Apple, and let me look at the forum post that I shared on Apple. I shared it. Let's check the time. I shared it yesterday 2:22 p.m. Eastern Standard Time. It takes me a few minutes to create the snapshots and post it. Therefore, if I took a short trade, I would have taken it sometime before 2:20 p.m. What did I share at 2:20 p.m.? The industry was neither strong nor weak relative to the other industries. It was cyan magenta moving sideways relative to other industries. Over 5-day period, it was showing deceleration. That was a reason to consider a short trade in this industry. Apple is a known stock. I remember its valuation, earnings growth, etc. The valuation was overvalued for a long time. And I also knew that the earnings growth was muted. Yesterday, the stock was down from the beginning. As you saw, the market was up considerably in the morning half. Only later it fell down. However, Apple was down from the beginning. And when I shared the snapshot, the industry peers were balanced between up and down moves. Earnings is over. So I looked at the Apple charts. If you looked at it using the 4-week, 2-week, 1-week, and daily chart, in the longer intervals, it was very bullish. In the daily chart also, there was no short trade setup. However, I noticed that it was up a lot. And if I go to the template with thrust and jump, you will see it was extended because it was down from the morning, and in the daily chart, it displayed a bear release signal. Relative performance was tilting down. There was a doji candle at price extreme high, and there was a bearish pressure and U-turn 2 days earlier. I switched to intraday chart looking for a short trade. It's not easiest trade to short Apple, short Netflix, short Amazon like that. However, if you are using precise entry techniques using the fine-tuned chart, it is possible to trade them. Not the easiest ones, but possible. 2 p.m. is here. 2 p.m. is somewhere here. So I might have shorted the stock somewhere in this area. You can see it was down from the morning session itself, though the market was very much up and it could never go above early range high. I was watching it from time to time and I took a short trade here, and in this case I shorted using verticals. I used put verticals, that is shorting a put strike maybe somewhere here and buying a put strike out of the money. Then I didn't have to worry about applying a stop loss. This trade has a significant profit considering the sharp drop after I entered the trade. That was a very nicely timed short trade. And if you go back to the market ETFs, if you see DIA also started to drop. All the market ETFs were starting to drop from the same time when I initiated the Apple short trade. That is what I meant by saying that you may try to fine tune the day trade or precise entry of swing trade by keeping an eye on the market ETFs. I timed it very well in this case. That was Apple, and let me go back to the daily chart. I timed it very well using fine-tuned chart. And why did I choose Apple to short and not the other FANG stocks? Because I saw the next memory support is very far away. Therefore, if I could get some profit by the end of the day, I could book some profit, partial profit if I wanted, and hold on to the remaining position overnight, hoping that it will fall further. Even if it closes the gap that was created by earnings, still I had significant profit potential relative to the risk, because using daily chart, the stop would be just above this watermark resistance. That would give me acceptable reward risk ratio. That is why I chose Apple to short among the FANG stocks and not the other stocks. The memory support or even the low of this gap up candle was significant distance away, and I could precisely enter the trade using fine tune chart. That was a short trading idea I shared in the forum. The other idea that I shared in the forum was pre-planned, and I believe I executed it very well, and before that I planned it very well, and much of that credit has to go to QFinder. I shared this post on 11th August. I did the analysis at the end of 10th August, and what did I see at that time? I shared the snapshots of QFinder at that time. In the previous several webinars, I have been showing that the Finder pie charts were all very bullish. However, at the end of 10th August, these are snapshots as of pre-market 11th August. Therefore, the charts are as of 10th August after market close. Overall, it was still bullish. However, I noticed the reversal signals were more bearish. And I knew that the market ETFs were at an extreme when you looked at the weekly charts using thrust and jump. Then I looked at the weekly finder as of 10th August after market close. Again, overall, it was bullish. However, the reversal signals were slightly more bearish than bullish, and it was only Tuesday, actually Monday's market close. So it was starting to turn around in the weekly as well as daily. Reversal signals means stock that were at an extreme high and were starting to reverse. That is what gives the reversal signals in Q systems. They are either touching memory resistance or bouncing down from memory resistance, or bearish headwind at the very top, double top box setup, or reversal candle. So this led me to look for reversal setups, and I started with the weekly finder. This is as of yesterday's market close. However, the weekly signals might not have changed. The headwind signals often give us a warning about possible reversal. So what I did, I looked for the weekly bearish headwind signals, and I found this stock ASH. It was at price extreme high and it was giving a bearish headwind signal as of Monday's close. The headwind is still there. That's why it is showing up in today's result also. So this was my starting point, how I identified ASH. Then I looked at it using at a glance template. Let's have a look at that. And here you will see slight difference between Q Global and Q Elite. The logic is same, but because of the difference in the platform, sometimes the signals may vary. Not often, but sometimes. And I noticed that difference here. Let me open ASH with Q Global also. In the Q Global at a glance chart, weekly daily chart, ASH came to the memory resistance, displayed a bearish headwind signal in the weekly chart. In the daily came to the memory resistance, and when I identified it, it displayed the bear release signal. If I shorted it, my stop would have been very narrow. I was aware of the memory support line. It still gave me an attractive reward risk ratio especially if I could take the trade using Q fine tune chart. Notice that there was a bear release signal as of Monday's market close. However, there was no bearish headwind in Q global. If you looked at Q elite, it actually gave a bearish headwind signal in daily and weekly both. That is what happens rarely, but possible. Maybe because of the platform changes, or maybe because of the data changes also. The data sources are different for terrestrial and metastock. The other signals were same. It came to the memory resistance in weekly daily and tilted down at the very high. You can see after the sharp move up, that was the first day probably anybody could think of shorting, if at all. I doubt if many people would think about shorting if the headwind signals were not there and if the memory resistances were not there. It would not be easy to identify this as a shorting candidate. I identified it on Monday's close. So on Tuesday, yesterday, I was ready to short it, and the fine-tuned chart again came in very handy. As I like for a stock to do, if I am thinking of shorting it, I like it to open higher. Exactly what happened yesterday. In fact, it went above previous day's high also, and then it started falling sharply. I shorted it right at this point using stocks. My stop was just above the high, above early range high that was never touched. And when price came here, I booked profit on the short stock position. Full position, in fact. I exited half position first, and in another one candle or two candles, I booked full profit on my short stock position. As I mentioned in the forum post, one reason I exited the full short stock position quickly with profit. In fact, I closed it after the risk distance was covered. So that was a very nicely executed trade. I was aware of the daily memory support. And the market was bullish. Later on, I saw that it was unable to go up and it was dropping again. Therefore, somewhere here, I shorted it using put verticals. Therefore, it was a defined risk trade and I didn't have to worry about stop loss. That is also in a very large profit now. Sometimes when you are shorting at the very top, you may position the strikes in different ways. If you are shorting with call verticals, usually people like to short slightly out of the money or in the money and buy back further out of the money. That is if you are using short call vertical. When the price is at a very high level like price extreme high or pendulum high, as was in this case, you may try to short with long put verticals, because in that case volatility will be your friend. And when you do that, the standard practice may be to buy put slightly in the money and short put out of the money. That gives attractive reward risk ratio. However, if you are thinking that the stock is going to drop considerably, then you may, instead of buying in the money, you can buy also out of the money. In this case, this is what I did. Let's see the options PNL. If you do that, you will see the PNL graph will be very attractive. Of course, you have to be accurate on your direction. It has to move considerably in your direction. Let's choose the September expiry that has 37 days to expiry. Currently price is 77.60. Let's look at the chart. When I was going to short it using verticals, it was at almost 79, 78, 97, 79. Let's say 79. I wanted to buy out of the money. So what I did, I bought 75 when price was at 79. So I bought 75 and I shorted 70. See the reward risk ratio now. For one lot, the max profit is 373, max loss is 127. Therefore, the reward risk ratio is 3:1. If you placed the strikes differently, reward risk ratio might be 1:1, or sometimes maybe even slightly less than out of 1:1. If you are shorting using short call vertical where the short call leg is out of the money itself, then the reward risk ratio is even worse. It may be 2:3 or even 1:3 sometimes, reward versus risk. However, in this case, I used long put out of the money, short put further out of the money. That gave me a reward risk ratio 3:1. And you may say this is as of now. When I shorted it, price was 79. So my reward risk ratio was very good. Now it is close to my long leg. If you are trading options, you may notice that when the price crosses through a leg, then the changes are most pronounced. Therefore, if it goes down a little bit more and pierces below 75, my long leg will give me maximum profit, maximum acceleration in profit, you may say. And the short leg is further out of the money. So I will end up with very attractive reward risk ratio. That is how I structured the long put verticals. And you may see this is the maximum loss for one lot. So if I was allowed to risk, for example, let's say $1,000 in each trade, for an example, which will be decided by 1 or 2% of total equity size, then I was allowed to buy 1,000 by 127, let's say 7 or 8 lots. I got a better price because I shorted earlier. So that is how I size my option trades. The maximum risk in any trade, whether it is stocks or options, I try to keep it constant. I executed it very well, and I think I chose the option strikes also very well. And as I mentioned, I already had some profit from the stock trade, and I have further profit from the options trade. I have no reason to let the overall trade turn into a loss. That was a trade that I identified from Q Finder, and I looked at the fundamental industry, technical, everything as I shared in the forum, and precisely executed using fine-tune chart. The fine-tune chart is very useful in precisely entering a trade that you have already planned. And this is a great demonstration, live demonstration, real life demonstration of that. Now, yesterday's market didn't change the trend to downtrend. That's why I'm not rushing into taking many short trades. However, I did close several long positions that I had. Some time ago on Twitter, I shared that I was starting to book profit in many long trades. I was still holding some. You may remember HWC was a bank that was posted by me, but the idea came from Enamul. I shared it earlier. The idea came several days ago on this day when it broke out of a memory resistance. Yesterday, it hit the upper boundary level. Therefore, if you are holding the position, you could book profit. That is the Q technique. I would suggest booking at least partial profit. not thinking it will continue to go up. You could continue to hold partial position, but at least partial profit could be booked. That's the Q approach. That was one trade. And when I discussed HWC in the previous webinar or webinars, I also mentioned I took long positions into other banks. One was WBS. Yesterday, that also went above the upper boundary level. It closed with a bearish shape candle. I had almost the risk distance covered, or probably all the risk distance covered. So I booked profit in WBS also. I am not very happy to hold on to a long position if there is a candle that is hitting upper boundary and that has long upper tail. And I will mention something afterwards. Let me go through few more trades that I exited with profit. WBS was one. CUBI. That was another trade that I mentioned of earlier. I entered it using fine-tune chart. Yesterday, for the second day, it ended with an upper tail. I had a profit in the trade and I exited. Let's now look at another thought that I shared, that was shared on August 11. I think I found it. Let's see the snapshots. Either 10th market close or 11th itself. This is 11th, yesterday's real-time snapshot. I created these graphs from QEdge. Broadcasting industry was up sharply. The pink color is the real-time performance. It was up very much. And industry score was also showing that it was up very much. Sector level is very broad. I don't use it for deciding trades. However, you could see that communication services first came down, but then it was going up. As far as score is concerned, it was steadily going up. That is the difference between watching sector performance, that is in absolute terms, and score relative to others. The score was showing that the sector was steadily strengthening. So I wanted to look for a shorting opportunity here. I looked at QEdge. The industry broadcasting was second best performer. We have 147 industries in the USA market. And if you looked at pace column, it was the most accelerating. So that was a very good reason to look for buy setups. And in this case, I found a very low risk, almost $1 or so, $1.68 stock. It was up by a large percentage, 8% plus, great valuation, short squeeze potential, and we saw from QEdge already the industry was very strong. Also, it is paying a very nice dividend, 5.1%. 10-day to 1-day percentage change showed that it was steadily going up. In fact, I entered it 1 day earlier, the day when it broke out. I will show that on the chart soon. When it broke out, and that day itself, it went up by 9%. And in real time, I saw it was going up again. Let's look at the live charts. ETM. And I'm going to change the daily chart to see the historical memory lines. On this day, it broke out of the memory resistance after earnings. That day it was up by more than 9%. I found it from a scan on low price stocks. Usually I don't try to look for trades from such low price stocks, but sometimes I do run scans on them. And it had a nice memory support on the weekly chart, and it was breaking out of memory resistance with high volume. So I took an entry in the stock using fine-tune chart. Yesterday it went up, and again you see it closed with a long upper tail. I booked profit in the trade. If you didn't use fine-tune chart, you would not enter it on this day because it ended with an upper tail. You would not also enter it yesterday because it ended with an upper tail. I could enter it and book profit quickly because I used fine-tune chart. You can see a common feature of all the stocks where I exited my long position, whether it was WBS or KUBI or ETM, or let's look at SPG. I shared SPG also in the forum. I shared it on this day, Monday, when it was breaking above the memory resistance. I mentioned in the forum that if you entered it, tried to enter it at market close, you would not. That is not the Q approach because it ended with a long upper tail. However, I took the trade using fine-tune chart, and I was aware of the earnings. I knew there were memory supports nearby. So in this case, I became a little bit more creative. I used synthetics, but I shorted the put at the memory support. I think around 60. I shorted 60 put. Let's say I entered it when price was around 65. So I shorted $5 below the current price, shorted the put. And I bought call $5 above the current price. So I didn't have to pay anything. It might be a small credit trade also, because usually puts are more expensive than calls, usually for stocks. So I could establish it, and I was confident to do that across earnings. Nothing is guaranteed, but I was confident that there was a high chance, even if price drops after earnings, it will find support at the memory support. So I shorted the put at memory support, and I calculated equal distance to the upside, and I bought out of the money call for a small credit trade. Synthetic position, but not the same strikes. And next day, price initially went up, and again you see it closed with a long upper tail. I had a good profit because both my short put and long calls were in profit, and again I closed my position. In fact, I started all my long positions. They were up significantly in the first half, and as I was looking at my overall equity, the PNL for the day, it was starting to come down, and I started booking profit in all the long positions, irrespective of whether I had booked partial profit or not. I was starting to close my positions. I don't know what will happen today. You can see SPG in the overnight market is up today, but that's fine. I'm happy to book profit when almost all my long positions end with a long upper tail. I'm happy to book profit. I'll be happier if SPG comes to the memory support and goes up from there, but it seems it is up in the overnight market. But that is fine. I think I made the right decision based on the information I had at that time. Because of the long upper tails, I was willing to take some short trades. And also, I want to show you one more thing. Let's go back to what kind of bearish trade would you take. When I shared this post, that was after Monday's close. You see how the Q Finder weekly pie charts look like. Only the reversal signals were more bearish, slightly more bearish than bullish, and the bearish percentage was 51%. That was as of Monday's close. Let's look at today's data. And I ran Finder already today on the same list of stocks. And you can see now from 51%, the reversal signals have increased to 62%. Overall, it is still more bullish than bearish. However, the weekly reversal signals have become more bearish. If I go back to the daily finder as of Monday's close, that will be this chart. As of Monday's close, overall it was bullish, but reversal signals were there more, 61%. And if we see as of Tuesday's close, now see, reversal signals are much more, 91%. And now the overall signals are overall, if you see, slightly more bearish than bullish. What it shows is that using the Q finder, I could take reversal short trades at the very top, right at the time market tilted down. It didn't change the direction, not yet at least, but it just tilted and I could take some very profitable trades in ASH1 and also Apple somewhat profitable, not so much as ASH. And another short trade that I took, that was an excellent trade also, that was in SE. I discussed it in the webinar earlier. Let's look at the fundamentals again. It was a $67 billion stock market cap without having a single year of profitable earnings. Now you can see the market cap has reduced to 56. It was 67 just a few days ago. Earnings is not out yet. When I shared it, it was looking weak to me, certainly overvalued. Earnings growth coming down, huge market cap, never ever made any money. And this is as of yesterday's market close using real-time Q Vital. You can see yesterday it was very weak again. In absolute terms, 88% of the 58 PR stocks were down. And if you look at QH, let's look up this stocks industry, very weak. Earlier, it was one of the strongest. This is how beautifully, I think, Q systems helped me to identify and short the stock. Let's look at the AC post. I think I posted in the forum. Let's check it out. SE. This one, 2 days ago. I analyzed in the weekly market roundup during the weekend. That time itself, it was bearish. And this is how I traded it. By the way, this also displayed a bearish headwind in the weekly chart. We saw several FANG stocks also displayed a bearish headwind in weekly charts. That was a signal for caution. It displayed a bear release signal in the daily. It had a bearish headwind earlier in daily, came back below the watermark resistance, creating a false upside breakout. It had successive days of bearish pressure. At price extreme high, it created a reversal candle. There were enough signals to look for a shorting opportunity using fine-tuned chart. Using weekly daily, there was no Q trade setup, but I used fine-tuned chart, and this was another case where I was lucky. It opened up and then sharply came down. I shorted it somewhere here, put stop just above early range high, and when the risk distance was covered, I booked my profit. I think I used options for that and I used synthetics for that. I opened the trade for 83 cents debit, and in less than an hour, I closed the trade with $660 credit. I opened it at 9:45 a.m. Eastern Standard Time, closed it at 10:35. In 50 minutes, I closed it with a very large percentage profit. it was using synthetics. That means it was equivalent to stocks and therefore undefined risk. It gave me 690% profit in 50 minutes. I closed the trade. If you look at SE now, let's change the daily chart template. Since I discussed the trade in the weekend market roundup, it is steadily coming down. I closed my synthetic short position. However, like I did for ASH, I opened a vertical bearish position. Therefore, even if it goes up a little bit, hopefully it will come down again. I will not have to worry about putting stop loss. So this is another stock where I could short while the market was at that extreme high. Another stock that I found yesterday, and you could find it from many different angles. Let's use one of them. Let's go to QH. Let's look at the stocks. Suppose you were looking at the stocks using real-time data yesterday. You saw the long upper tails in many stocks. You saw the market ETFs coming down. You saw the Q finder turning weaker. Not bearish. I cannot say the market was bearish, but market was turning weaker. So if you wanted to look for shorting opportunities in QH, you could look for the start shorting opportunities. That is clicking the 3-star red button to look for stocks that were overvalued with negative earnings growth. See the stock that came to the top run. It came down by 10% yesterday. That is how you could notice this stock. If you look at its industry, it was very strong earlier, weakening now. That was a reason to look for shorts. The stock came down heavily, fundamentally overvalued, very negative earnings growth. And let's look at run now. It went up sharply here and went up like nothing less than a rocket from late May. However, the earnings was announced and yesterday it came down sharply, displayed a bearish headwind signal at the very top. Traffic light candle color in daily is bearish, shape is very bearish, extreme bearish pressure. Notice, though extreme bearish pressure is there, not extreme high volume. That is the usefulness of extreme bearish pressure. You are able to identify trades even if the volume may not be very high. There is no Q short trade setup here. There is a valid headwind short trade setup, you may say, except that the stop loss would be far away if you use the daily chart. This is a stock where I'll be happy if it goes up little bit, either on the daily chart or on fine-tune chart and starts to go down again. And if that decline happens and if it coincides with market decline that you may find from the ETF real-time charts, that might give a shorting opportunity. This was a high flyer, and if you check the news for earnings, what happened? Sunrun EPS may not compare to estimate. EPS actual was 0.11, estimate was 0.16, sales 181 million, miss estimate 187. I don't use the news for deciding my trades. However, I kept an eye on that. My decision was based on the QH industry strength, the fact that the stock run is a star shorting candidate, and in the daily chart, it is looking very weak. Again, there is no short trade setup using at a glance template. However, you may keep an eye on the stock using fine-tuned chart. only one stock I shared in last few days, thinking it may be a good buy setup. That was on Nikola. Maybe a paper tiger because it's a startup. It has not manufactured any truck yet. It seems to have very promising technology, though nothing has been produced yet. It came to above $90 here. Let's see the highest price. It came to 94, almost $94. And I remember seeing Nikola in different people sharing when it was at this point. That was not the point in Q Technique to buy it. But when it pulled back, gave a bullish headwind signal and then broke above the memory resistance on this day, that could be the opportune day to buy it, putting stop just below the gap slow, the gap up candle slow. Yesterday it came down. Today in the overnight market, like many other instruments, it is up. Now, if you are buying or if I am buying this stock, we may not buy it thinking there will be revenue growth, earnings growth next quarter because it has zero revenue now, no earnings certainly. It has some promising technology, but we don't know whether it is on paper or real because it has not manufactured any truck. So if I was going to buy it, this is what I was thinking. Instead of putting money in the stock share, and this is a volatile stock. It may come down again from $40 to $20. And if I buy the stock, I'll have to pinch my nose, pinch my purse, hold on to it. I was thinking, why not I look at the middle of the current price, say 40, and the high 90, middle will be around 60, 65. Why don't I try to buy some leaps? 60, let's say 60. Let's look at the Option Station Pro. Instead of buying next month, we could go to, this is actually Jan 21 of 2022. Not 21. This is Jan 222, 156 days to expiry. One way to just park some money in the stock thinking that it may go up a lot in next 2 years. If it proves itself, it doesn't have to actually generate revenue if it can achieve certain milestones. One milestone that it declared it would achieve this year, it has achieved now. Why it went up by 20% 2 days ago? Because it received an order. As per the chairman CEO, it is a firm order. It is not something that the buyer can go back on. It's a firm order of 2,500 trucks. And he promised few more milestones this year. If those milestones can be achieved, even without revenue, without earnings, this stock is likely to go up. So instead of risking money in the shares itself, one could buy leaps expiring. I can see the latest one I can find, Jan 2022, and no point buying in the money because we are expecting it to go up. If we are buying it, paper company like that could buy not the strike 90 where price went last time, that is far out of the money, but 60 strike I thought could be a balance. One could buy the call, say, let's say mid price, what? Let's try to click it, mid price of $7. And if we were going to buy the stock anyway, you could short the put 60 strike expiring in 2022 January. That would give you a credit. And of course, the margin will be same as the reserve stock minus the credit that you would receive. You could establish it for a credit. Whether you use the call or use the synthetic expiring in 2022, I thought that might be a more attractive choice instead of buying the stock and going through possible up-down turbulence. Because this company is not making money. no revenue. If I was going to buy it, I was going to buy it by parking some money in the stock and holding it for the long run. I cannot expect that it will go up immediately. Not my usual swing trade. If I was going to buy Nikola, I would probably do something like that. That was the only bullish stock, and that was also not a true swing trade setup, not at least in my mind, because this is not matching the fundamental criteria that I look for. But that was the only bullish stock I shared in last couple of days. We'll see how the market does today. And if market continues to go up, I will keep an eye on the finder on the QEdge homepage to see if it has market breadth in it, and accordingly decide whether to buy longs now or look for some more short trades. I have few short open positions, as I shared. I have few, not many, but few long positions. I closed many of my long positions by yesterday. We are at the 1 hour mark. That is all that I plan to share in today's session. Thanks a lot for attending. I look forward to seeing you in our next session. Have a great day, have a great week, and trade profitably, as I tend to say. And as my forum posts illustrate, there is absolutely no reason not to trade profitably if we are disciplined and if we have a robust system that we all have. Thank you very much. See you soon again. Take care. Keep safe. Bye bye.